Hey there, I'm Bobby Jones, a retired CRNA turned apartment investor and founder of On-Call Capital. Now, when I started learning about apartment syndications, two of the terms that I heard thrown around were 506B and 506C. Now, this sounded like a bunch of legal gobbledygook to me at first. Being a CRNA by trade with no background in real estate, I spent months educating myself through podcasts, reliable internet sources, and investing books. And after more time and learning, I discovered that these two terms were rules from SEC Regulation D, and that the difference between them is significant for passive investors. In 2012, the Jobs Act was passed, and that allowed businesses to advertise and sell securities as long as they were made only to accredited investors verified using reasonable steps. Accredited investors are people who have $200,000 in income individually or $300,000 jointly with a spouse, or a $1 million net worth individually or jointly. For the previous 80 years, companies that wished to sell private securities had to rely on friends, family, and their own networks because general solicitation or advertising was not allowed by securities law. Previously, the only way investors had access to deals was if they knew a guy who knew a guy. But that all changed in September of 2013 when the Jobs Act was finally put into effect, notably modifying the Securities Act of 1933 by splitting Rule 506 into two sections, 506B and 506C. What is 506B? Well, we already went over. The original rule was known as Rule 506, but now that rule is Rule 506B. It allows a company to raise an unlimited amount of money from an unlimited amount of accredited investors and up to 35 sophisticated investors. Now, that's an important point there. A sophisticated investor is someone who has such knowledge and experience in financial and business matters that he or she can evaluate the merits and risks of a prospective investment. These investors don't have the income or net worth of an accredited investor. Now, don't worry, you don't need to wear a suit and tie for an interview or go through some grueling vetting process here. Perhaps you've started your own business in the past, or you have an established base of knowledge in the underlying asset class. A quick discussion with a potential sponsor is enough for them to evaluate your experience and establish a relationship if you haven't yet reached accredited status. Many nurse anesthesiologists, dentists, and even physicians fit into the sophisticated category when they're first starting out. This is great news for regular investors. Now they can invest in apartment deals that only accredited investors had access to in the past. If you do fall in the accredited investor category, then you're able to self-certify for 506B deals by simply attesting that you meet the conditions of an accredited investor. So what are some general guidelines for these 506B investments? Well, you cannot advertise or solicit these types of securities. That's prohibited because you are including sophisticated investors and you don't have a vetting process. Syndicators are allowed to sell to an unlimited number of accredited investors and up to 35 non-accredited but sophisticated investors. They must provide to the non-accredited investors disclosure documents, including an audit of the fund's balance sheet. The issuer may rely on investor self-certification, as we mentioned before. An accredited investor simply has to attest that they meet the conditions of an accredited investor. That's it. No third-party verification necessary. And the issuer or sponsor must have a substantive pre-existing relationship with investors. Now, that last point is important. At On-Call Capital, we offer both types of deals. So we need to have a pre-existing relationship with you before showing you any 506B investment opportunity. If you haven't yet scheduled a call with me, please do so. Now, what is 506C? The second exception of Regulation D is 506C, and there are some big differences with this type of offering. Those selling securities can advertise to anyone here. You can put it out on Facebook, put it on social media, put it in the mail, anything you want, okay? But only accredited investors can be accepted in these offerings. The sponsor must be able to demonstrate that they took reasonable steps to ensure that all of those investors are actually accredited, which means there's no self-certifying allowed. You must be verified by a CPA, attorney, or registered broker dealer who has reviewed the investor financials, okay? And the other thing about 506C investments is that no substantive pre-existing relationship is required to invest, okay? Now, I know that this particular episode or video got a bit policy heavy, and I really appreciate you hanging in there until the end. I hope this information has been helpful. Let me know in the comments section. If you have questions, comments, just throw them in the comments section below. I'm more than happy to answer anything that you got for me. You can also find me on Facebook, LinkedIn, or Instagram, or you can visit my website at www.oncallinvestments.com. Thanks for watching, and I'll see you on the next video.